Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israel and Hezbollah agreed to a 60-day ceasefire mediated by the U.S. and France. It came into effect just over 2 hours ago. President-elect Donald Trump announces a slew of cabinet appointments, including Jamieson Greer as trade representative and Kevin Hassett to lead the National Economic Council. And oil reacting to abating tensions in the region while stocks and the dollar fluctuate on Trump's commitment to tariffs. It has just gone 8 a.m. across the Emirates. I'm Jamieson Greer in Dubai. Well, we are in for a very busy show today. We're going to be discussing the news of the ceasefire, the ramifications for the region, what it means, and this very important step to de-escalate some of the tensions in this region. But before we get to that, let's just take a quick look at some of the market reaction today. We saw another record high for the S&P yesterday. U.S. stocks brushing off some of those Trump comments vis-a-vis tariffs, ending at another record high, 52nd record high for the year for the S&P futures, still leaning towards the green this morning, marginally so. 10-year yields continue to rally. Today, not doing much, but we did end the day about 10 basis points lower yesterday after that Trump tariff tweet, which really sent the market into a bit of a tailspin all across areas of the market, a particular focus on the USD. Today, we're actually pulling back some of the gains, but at one point yesterday, the dollar was about 0.7% firmer, particularly versus the Canadian dollar and the Mexican peso, which were in the eye of the storm. And then we have Brent also today stabilizing just below $73, but essentially we are down about 3% over the course of the week as the market factors out some of those geopolitical risks that we've been talking about and into that OPEC Plus meeting. A very quick look as well at how the Israeli shekel has performed over the last couple of days. It's not actively trading right now, but just to let you know that it has actually strengthened about 3% in the last couple of days on anticipation of this ceasefire. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, just bring us up to speed.
Yeah, despite that easing of Middle East tensions, Asia stocks, as you can see, not quite benefiting from that. It is a mixed bag, but Japan, South Korea, Taiwan, these are the markets that are continuing to underperform as we see traders weighing out the prospect of tariffs. China, for another day, managing to outperform, but we are seeing the turnover is low for another day, so the strength behind that signal is not very clear. Now, among the moves that we're seeing in stock markets, we're also keeping a close watch on dollar yen because the Japanese currency is one of the top gainers, whether you're looking across Asia currencies or the G10s. This is not just because of the slight softness we're seeing in the Bloomberg dollar index today. It's also against the backdrop of traders ramping up their bets of a December rate hike from the Bank of Japan. Jumana?
Avril, thank you so much. That was Avril Hong in Singapore. Well, a 60-day ceasefire between Israel and Lebanon's Hezbollah has been in effect now for 2 hours. Now, these are live pictures of Beirut, where it's just after 6 a.m., and you can see it is a picture of calm, though there's still legacy smoke rising from some of the buildings after more heavy airstrikes on several parts of Beirut in the run-up to the announcement last night. Many social media reports of many families moving back towards the southern part of the country. 1.2 million people have been displaced throughout the course of this crisis. Now, the deal comes after weeks of talks mediated by the U.S. and France. And this truce is widely seen as first steps towards ending a conflict that has killed thousands of people and opens the door for fresh peace initiatives in the Gaza Strip as well. Prime Minister Benjamin Netanyahu says Israel will now be able to focus on what he described as the Iranian threat and heighten pressure in its war against Hamas in Gaza.
I am determined to do whatever it takes to prevent Iran from obtaining nuclear weapons. I have said many times that a good agreement is an agreement that is enforced, and we will enforce it.
For nearly 14 months, a deadly conflict raged across the border that separates Israel and Lebanon. A conflict that began the day after the October 7 attack by Hamas on Israel. Hours later, at 2 a.m. in the morning, Hezbollah and other terrorist organizations backed by Iran attacked Israel in support of Hamas. Let's be clear, Israel did not launch this war.
For more, Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, joins me now. So the ceasefire has been in effect for the last 2 hours now. What do we know about the terms of the ceasefire?
So it's initially a 60-day ceasefire, and it's basically to give them a little bit of room or breathing space to get something a bit more comprehensive. But it's back to exactly what we've been discussing now for several weeks, which is something resembling this UN resolution from 14 years ago, or thereabouts, or 18 years ago, isn't it? And that is going to be much tougher to get hold of and to grasp and to get some sort of agreement on. So this is a big step forward. I think everyone is very optimistic, and there's, I don't want in any way to diminish the fact that this is important, but there is still a long way to go for a permanent ceasefire.
I want to go back to the joint statement put out by the US President and the French President Macron, and they say in one part of it that this announcement will create the conditions to restore lasting calm and allow residents in both countries to return safely to their homes. What are the preconditions for this so-called lasting calm?
I think the main thing is going to be clearing Hezbollah out of southern Lebanon and convincing the Israelis that that has happened. Now, the Israelis are feeling a lot more confident because they've gone in, as you know, on the ground, several kilometers in. We know that they've taken out the infrastructure, and that's an important thing because it means that it's going to be much harder, for instance, for Hezbollah to replicate what we saw from Hamas a year ago coming out of the Gaza Strip. If they're physically not present for several kilometers, that gives Israel a certain amount of warning if they decide to swarm in. And secondarily, in terms of the rocket attacks, again, Iron Dome and the other air defenses in Israel don't work so well when you're only 1 or 2 kilometers away from the launch site. So the further back they get, the more time it gives Israel to react and to protect its population.
And of course, there's the international monitoring system in place. We'll talk more about that with our guests. But Stuart Livingstone-Wallace, thank you very much for the overview of this 60-day truce that's been agreed to. Bloomberg's executive editor for Middle East, North Africa and Russia. Joining me now from Doha is Mehran Kamrava. He is professor of government at Georgetown University in Qatar. Sir, maybe I just want to start off asking you your thoughts on the ceasefire that was agreed to. It had been in the works for the last couple of days, a lot of optimism going into the announcement last night. Is it your expectation that this, temporary ceasefire could actually lead to lasting calm?
A lot of it depends on what happens in Gaza and then the West Bank. I think we will see a cessation of hostilities, at least for the next 30 to 45 days. But I think in terms of a permanent ceasefire, particularly between Lebanese groups and specifically Hezbollah and the Israeli government, but this Israeli government, Netanyahu's extremely right-wing government, I think it would be too optimistic to assume we've seen the end of hostilities between Lebanon and Israel.
What role do you think Iran would have played in getting Hezbollah to agree to the terms of the ceasefire?
Well, Iran has been consistent in trying to pressure Hezbollah, first not to launch full-scale attacks on Israel, and then calling for an immediate end to the hostilities. Because for Iran, Hezbollah has served as a deterrent against potential Israeli attacks on Iran. And so Iran did not want to sacrifice Hezbollah, didn't want Hezbollah's military capabilities to be completely eroded and undermined to the point that it couldn't act as a deterrent. And so no doubt Iran, through indirect means, probably pressuring Hezbollah, played a significant role in encouraging Hezbollah to accept the terms of the ceasefire.
So I want to go back to how you answered the original question, which is the question about whether this is going to lead to a lasting calm in the region obviously depends now on what happens with those ceasefire discussions that are bound to take place between Israel and Hamas vis-a-vis Gaza. What do you think needs to happen there in order to also unlock the opportunity for a ceasefire and the release of the hostages?
Well, a ceasefire in Gaza, an end to the genocide that has been unfolding since October of 2023 in Gaza. And I think so long as that Israeli determination, Netanyahu's determination more specifically, to pursue the war in Gaza in the devastating way that he has been pursuing it, I think we will not see calm in the immediate vicinity of Israel, Palestine, Lebanon, Syria, and in the broader Middle East. I think everybody except Netanyahu is aware of the dire need for ceasefire in Gaza.
And that is certainly your characterization of what is going on. But let me just ask you how you think the U.S. is viewing the situation now, because from what I can gather, just reading reports over the last 24 hours, the Trump administration was aware of the discussions that were taking place here. And it seems there is a big push from both Biden and Trump to put an end to the hostilities that are going on in the region. How likely is it that Israel will actually listen to the push that is coming from the U.S.?
Very likely, because on the one hand, Biden wants to leave the White House with a legacy of at least a ceasefire and an end to the genocide in Gaza, if not an end to the genocide in Gaza. But I think Trump also doesn't like war because it's not good for business. It's certainly not good for his attention to America's own domestic and national interests. So I think, and Netanyahu, of course, wants to doesn't want to antagonize Trump and wants to continue to remain in Trump's good graces. So I think Netanyahu, Biden, Trump, everybody has a vested interest in at least a temporary cessation of hostilities for the time being.
Yeah, very clear. Well, we appreciate you coming on our show to discuss what this could mean for the region, for Lebanon, Israel, and of course beyond. Mehran Kamrava, professor of government at Georgetown University in Qatar. Thank you. Now, coming up, President-elect Donald Trump names 2 White House veterans to key posts on his economic team as his tariff threat heralds unease in global halls of power. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. President-elect Donald Trump has named Kevin Hassett to direct the National Economic Council and Jamieson Greer as the U.S. trade representative, filling 2 key posts on his economic team. Bloomberg's Katya Dimitrieva joins us for more. Katya, what do these appointments signal about economic policy to come? I mean, this is a question that we ask with every single appointment, but what have we learned from these 2 latest appointments to key positions as well?
Well, I think if anyone had any doubts about Trump's tariff and tax policy, they should be dispelled. I mean, as you mentioned, these 2 candidates are veterans, not just of those key issues, but also of previous Trump administration. So we have in Kevin Hassett someone who formerly led the CEA, and I remember covering him at the time, and he's sort of like an economist. He a lot of his criticism came out of official statistics. So, he really vouched for alternative stats that showed a better economy than existed at the time. So he'll be sort of coming back to spearhead likely the TCJA. So Trump has promised to extend his kind of signature tax cuts policy. That was something that Hassett previously ran, and he's likely just to come back in that same seat. So that's what we expect from him. For trade rep, we of course have sources telling us that Greer is the likely candidate. Now, broadly expected before that it would be Robert Lighthizer kind of returning to this role. But what we have in Greer is sort of a Lighthizer 2.0. So this is someone who has long been a protege of Lighthizer's when it came to tariff policy. And he was, in fact, his chief of staff as well.
Yeah, so it's interesting that you pick up on the point in the selection of Jamieson Greer. I mean, that's going to be a very big role for the incoming Trump administration. And we know that because Trump has been campaigning on tariffs. Yesterday, that tweet sent markets into a bit of a tailspin. So far, what has been the reaction to some of the nominations that Trump has put forward?
Yeah, as you mentioned, markets got a bit of a deja vu. So we had traders and currency kind of reacting right away. The dollar strengthened, the U.S. or the Canadian dollar rather, and the peso weakened. And we had policymakers reacting right away. So Trump is not yet in the White House. He won't be until inauguration, of course, next year. But Trudeau, Prime Minister of Canada, picked up the phone, called Trump immediately. We also had reaction from Mexico with the president there, kind of veiled threats to impose tariffs as well. And then we had a bit of passing the buck as well. So what we know from Trudeau's conversation with Trump is that he kind of said, well, you shouldn't be looking at us for migration, for immigration. That's really coming from Mexico. And then from Mexico's side, the president said, well, if we're talking about fentanyl, you should be looking at Asian economies and Asian countries for that. So we can expect that, a lot more of this will be happening after Trump actually comes to power. But the other thing I would mention is that the tariffs that were announced were lower than what we have heard in the past from Trump. So frankly, we still don't know whether that 10% and 25% in addition to the 60% and 20% flagged before or not. So that's another potential area where markets could react.
Yeah. Or indeed, if it's just a negotiating tactic, but remains to be seen. January 20 is the date. Bloomberg's Katya Dimitrieva, thanks so much. Now for a look at some of the other stories we're following this morning. Huawei is to strip its smartphones and tablets of Google's Android software from next year as it pivots away from U.S. technology. The company's new flagship phone, the Mate 70, will debut Harmony OS next, an operating system that does away with remnants of Android in favor of entirely indigenous tech. The rollout is a key part of Huawei's attempt to break free from years of U.S. sanctions. Coming up, OPEC Plus nations weigh delaying the oil production restart planned for January as crude prices continue to trade in a range. We'll talk markets with Raffaele Bertoni from the Gulf Investment Corporation. That's coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumana Bersachi in Dubai. Oil steadies on signs OPEC Plus will once again delay restoring some output, which counters easing geopolitical risks after a ceasefire agreement between Israel and Hezbollah. Let's bring in Raffaele Bertoni, head of debt capital markets at Gulf Investment Corporation. Let me just ask you a question pertaining to the big geopolitical news of the morning, and that is the fact that this ceasefire has now been implemented. It's gone into effect as of a couple of hours ago. How should markets, global markets, be reacting to this news?
Good morning, Joumana. I don't think the market will react massively. The oil price was not pricing any escalation risk. Therefore, there is no major pressure on oil price, which the trend is still negative for other reasons, mainly weak demand from China, inability of the OPEC to enforce further production cuts, and in particular the outlook for larger production from US. For the other markets here in the region, there was no major pricing of risk. The performance is really strong. On the bond side, we had tightening of spreads and the good news of the upgrade of Saudi just a few days ago. So we don't expect any major market movements after the news.
Yeah. When I think about the potential risks for this part of the world over the next year, you've got the geopolitical risks, which we just spoke about, but then also the potential and the risk for the price of oil to keep sliding lower, a major economic headwind for many of the Gulf countries, and then also this prospect of tariffs from the Trump administration. To what extent are you focused also on that latter point and the fact that the Trump administration could come in, start imposing tariffs more broadly around the world? The ramifications that could have on global growth?
In terms of tariffs, the regional markets are not really exposed. They are not the big exporters of goods and services. The major exports are obviously oil. And we know that based on the past experience that each country has been able to manage the cost production of oil much more efficiently compared to the past. So they are less sensible to the weakening of oil price. And also we know that the region is engaging in a very large effort to diversify their economies. So their dependence from oil is much lower than what we used to have in the past.
Right. Let me ask you about market direction. Yet another record high for the S&P yesterday. It's 52nd of the year. Do you think we're going to see more record highs by the end of 2024?
Absolutely. We have a very positive outlook for equities. In this environment where we have still strong economic growth, especially in the U.S., large fiscal stimulus and central banks tightening interest rates. So all the ingredients for a good performance of equities are there. And we expect that this exceptionalism of the U.S. economy will continue. We overweight the equities versus bond, and we overweight the U.S. equities versus any other market.
Yeah, and just quickly, I've got about a minute here, but 10-year yields got some support around 4.4%. Is this a level where you would look to start buying as well?
Well, that's not the level where we would like to increase our exposure, both in terms of size and duration, but it's a level where we close our short duration position. There are lots of negative news on fixed income assets price at the moment, in particular tariffs, which could be inflationary in the very short term, but not necessarily inflationary in the medium long term. And that's something that the market is starting focusing on. So we expect that the 10-year Treasury will stabilize at this level, and we would be ready to increase our duration and exposure if eventually the 10-year will go above 4.75%.
Okay, interesting. Okay, so 4.75 is the line in the sand then. Thank you for sharing your perspectives with us on everything from global markets to fixed income and duration. Raffaele Bertoni, Head of Debt Capital Markets at Gulf Investment Corporation. A quick look at equity futures before we head to the break. This is the picture building on from another record high, but futures today not doing that much. Euro stocks still leaning towards the red after a negative day yesterday. Coming up, we're going to talk more about that 60-day ceasefire between Israel and Lebanon-based Hezbollah. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israel and Hezbollah agreed to a 60-day ceasefire mediated by the U.S. and France. It came into effect just over 2.5 hours ago. President-elect Donald Trump announces a slew of cabinet appointments, including Jamieson Greer as trade representative and Kevin Hassett to lead the National Economic Council. Plus, Namibians head to the polls today in the most tightly contested presidential election since 1990. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Big day for the region geopolitically. Let's get you up to speed on markets. We saw another record close for the S&P yesterday, 52nd record close of the year. Wall Street brushing off some of the talk about potentially new tariffs once Trump takes office as of January 20. That sent lots of markets into a tailspin, not least the currencies of both Canada and the Mexican peso, I should say, and the Canadian dollar. We're down more than 1% at one point in trading. Today, the USD isn't doing much, but yesterday on that Trump tweet vis-a-vis tariffs, we did strengthen 0.7%. 10-year yields continue to rally. We're sitting at 4.3 yesterday. We bounced about 10 basis points yesterday after the news of the tariffs came out. And then Brent also in focus as we head into the OPEC Plus meeting, sitting at around $73 here. We are down about 3% over the last couple of sessions, which raises some important questions into the OPEC Plus ministerial meeting, which which will be virtual, by the way. And a quick look at the Israeli shekel, because the currency actually had been strengthening in anticipation of this ceasefire. This is the performance of the last couple of days. Into the announcement, we have strengthened about 3% versus the USD. And well, actually here you can see we're about 1.6%, but over the course of the last couple of days, 3% stronger versus the USD. So the ceasefire announcement having a positive impact on the Israeli currency. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio as ever. Avril, just bring us up to speed.
Yeah, we're seeing Asia stocks, as we discussed earlier, not quite benefiting from the easing of Middle East tensions, offset by those tariff risks. But I thought I'd highlight what we're seeing in G10 APEC currencies because they're climbing today. It's not just because of a slightly softer dollar. In Australia, we had a CPI reading. The trimmed mean, which strips out the volatile items, climbs. So complicating things from the RBA, the RBNZ, in New Zealand today, cutting 50 basis points, signaling another big move in February. But as our MLAV colleagues have pointed out, this is pretty consistent with the RBNZ's approach of front-loading policy. And it also doesn't take away the upside risk of inflation next year. So the Kiwi dollar has been climbing, although it's pairing some of the earlier gains. The Japanese yen, strongest against the greenback in 3 weeks. Traders really warming to the idea of a December BOJ rate hike, especially if you look at the swaps market and how they're pricing in the probability. That's really climbed this past week or so. Jumana.
Avril, thank you very much. Avril Hong in Singapore. Now back to our top story, the start of a ceasefire between Israel and Lebanon-based Hezbollah. The 60-day truce comes after weeks of talks mediated by the U.S. and France. President Biden now says the U.S., along with Egypt, Qatar and Turkey, will make a fresh push for a ceasefire between Israel and Hamas in Gaza.
Far too many civilians in Gaza have suffered, far too much. And Hamas has refused for months and months to negotiate a good faith ceasefire and a hostage deal. And so now Hamas has a choice to make. Their only way out is to release the hostages, including American citizens, which they hold.
For analysis on all these latest developments, we're joined by Niamh McBurney, Associate Director at Control Risk. If I list through the details of this 60-day truce, we know that as far as what has been released, Israel will gradually withdraw their troops from the south. Hezbollah will retreat from the south, 30 kilometers away from the border, with a view eventually to disarm. The Lebanese army will be deployed in the south, and there'll be an international monitoring agency set up. The reason why I'm listing all of this is because it really reminds me of that Resolution 1701 that the UN introduced after the July 2006 war. Of course, we know that was never implemented. What is the hope that this time around something like it, a version of 1701, will actually be adhered to?
So that's not exactly clear to any of us, I'll be honest. UN Security Council Resolution 1701, which has all those components that you mentioned, was never formally implemented because the Lebanese government was never willing to, among other things, to be able to fully disarm Hezbollah. Whether that political will is there now isn't clear to us. It doesn't appear to be, although the group is considerably weakened politically within Lebanon, militarily, of course, but at the same time, it is an inherent part of Lebanon's political and social structure. And so to seek to disarm it, which would have other impacts for the group as well, which could weaken it, politically, undermine the support it gives other political groups. It's not clear that all the political actors in Lebanon are agreed that they will follow through on this. But what this does give us is at least the basis for a starting point in the short term, over 60 days.
Yeah. So I was just looking at some of the economic figures in terms of the toll that this conflict has had, both on Lebanon and on Israel in terms of economic damage. And clearly there's going to be an effort to start with the economic rebuilding. But in the absence of political rebuilding, again, anything they do there might actually prove to be short-lived. So from a political rebuilding perspective, what needs to be done in Lebanon now?
We need to see a lot more consensus than we have. We need to have a new president, as we've talked about previously. We also, I think, ultimately need to find a new vision politically for Lebanon, something that can help move the country forward, in addition to accommodating the fact that Israel is now a very different counterparty in its bilateral relationship, ultimately.
Yeah, I mean, so this is the question, right? And you just wonder whether this truce. And by the way, it's interesting because up until, I would say, a month ago, Hezbollah and Sayyid Hasan Nasrallah, before he was assassinated, very clearly made a linkage between a ceasefire deal in Gaza and a ceasefire in Lebanon. The language has changed given the blows that Hezbollah have sustained over the last couple of months. But I do wonder to what extent this could actually evolve into a lasting calm, so long as the war in Gaza continues.
It ultimately depends on what both sides, and by that I mean Hezbollah and Israel, as the new red lines. We have a 60-day period of a pause. What rate is Israel expecting Hezbollah to, reduce its presence in southern Lebanon? Is it going to do it too slowly, and therefore, the IDF re-enters Lebanese territory, or is there something that Israel does that Hezbollah considers unacceptable and then relaunches rockets? We don't ultimately know what those red lines are, so there's a really big question mark over that.
One of the questions that I asked one of the earlier guests is how involved Iran would have been in all of these discussions. We know they're also on the back foot. I thought it was interesting that the President Pezeshkian is sort of floating the possibility of restarting discussions again with European counterparts vis-a-vis their nuclear ambitions, perhaps introducing the removal of sanctions. It seems very much to me that because they are on the back foot, they don't have the appetite to keep prolonging this war any longer.
This is definitely a component of it. The other part of it is the impending inauguration of President-elect Donald Trump. His return is causing all the parties in this conflict and more broadly in the region to recalculate what they think is their own red lines, and ultimately we'll wait and see over the next couple of weeks whether they continue with this path once he's in office.
What do you think will happen once President Trump is in office? If you look at his nominations for Middle East envoy and various other senior positions around the Middle East, they are more closely associated, I would say, to Israel. They've been quite hawkish on Iran as well. Are you expecting this so-called mantra of maximum pressure to resume once President Trump returns?
We are, absolutely. We're expecting to see a version of maximum pressure 2.0. We expect it to have components of the first type, but given the way the environment has changed fundamentally, the grey and the black market for Iranian oil exports has expanded massively, both because of the pathways that Iran created after 2018 with maximum pressure 1.0, but also as a result of the war in Ukraine. So it's going to be a lot harder for the new incoming administration to be able to tamp down on the export trade that it had previously. So they're going to need new mechanisms. We need to wait and see what they are. But we are expecting to see quite a robust stance towards Iran. Now, the potential administration officials, because of course we're waiting for them to be confirmed, it could be March or April, have been suggesting that we will see this as the first step on a path towards a much more positive relationship with Iran. But that didn't work in 2019. So the question is, what's different now? Iran is on the back foot, strategically, politically, in so many different ways. But still, there are core tenets to the government there and to how they feel, perceive their place in the region that is still going to make it difficult for them to come to the table with the US and renegotiate or negotiate a new JCPOA.
Yeah, there are so many questions still. But what we do know is that this 60-day truce is fully in effect now. At least it has been for the last couple of hours. Niamh McBurney, Associate Director at Control Risks. Great to have you on the show. Now, coming up, Saudi's spending slowdown. The kingdom trims its budget for next year as it adjusts to a muted oil price. We'll have details next and a look ahead to OPEC Plus talks. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Oil in focus today as key OPEC Plus nations begin discussions to delay the production restart planned for January, potentially for several months. Now let's get the details from Stephen Sachinski, who heads up our Asia Energy team. What are the expectations going into this OPEC Plus meeting? We know it's going to be virtual.
Yeah, it's going to be virtual, and I think a big focus will be on whether or not they delay the cuts. Delay the increase. Now, they could delay the increase into the second quarter. According to traders, RBC Capital said that perhaps it'll be late second quarter for that delay. Now, what the plan is for at the moment is for OPEC Plus for 8 OPEC Plus nations to gradually increase output to 2.2 million barrels a day from January. They had pushed that back from October because of a market oversupply. They've had these cuts in place since 2022 to help shore up prices, but we got the chart right, or we have the prices right here next to me, and Brent is around $73, and with this risk premium leaving the Middle East, you could see it fall further. So OPEC Plus has already begun talks about delaying these production increases from January for several months, according to a Bloomberg report from yesterday.
So here's the thing. I'm just looking at the numbers here. So these voluntary cutters, those 8 OPEC plus nations, eventually will have to bring back, or the plan is to bring back 2.2 million barrels per day of oil. At the same time, the forecast for oil demand growth is lower than that number. The IEA estimates, I think it's something around 1 million barrels per day or thereabouts. Even OPEC plus themselves have had to revise down their forecast for oil demand several times over the last couple of quarters. Doesn't it appear as though there is a big mismatch between what could hit on the supply side and what they're penciling in on demand? So OPEC plus hands seem to be tied.
Yeah, I mean, they're in a really difficult situation. There was a really interesting sort of article that came out from Iran that was very quickly retracted from an official there that essentially said that what you said, their hands are tied. There's very little room for OPEC Plus to maneuver because not only is demand weaker, the article mentioned Chinese demand was a bit weaker going into 2025, but also as OPEC Plus cut from 2022, U.S. oil production increased over that same period by millions of barrels a day. And it's staying resilient. I think there was an expectation that shale drillers would pull back when prices went into the $70 range for Brent and WTI and hit the $60 range for WTI, but that hasn't exactly happened, and U.S. output has been pretty strong. So OPEC Plus is in a different world where they are facing off against drillers in the U.S. and elsewhere, and if they add to the market, they're going to be adding to this bearish environment. So the discussions will be, hey, are we going to kick this can down the road a few months? And then again, a few months later, as you pointed out, they might have to be kicking it again. So OPEC Plus is in a difficult situation. And is it also a situation where they just rip the Band-Aid off and say, hey, we're going to increase production and we don't care what happens to prices? That's going to be part of the discussions that are going to be occurring over this weekend.
Yeah, and of course, we haven't even talked about the Trump administration coming back in and wanting to increase the amount of oil that the U.S. is producing. So something to bear in mind as well. Bloomberg, Stephen Tuschinski, thank you so much. Now, Saudi Arabia has outlined plans to trim spending next year after overshooting targets for the current year as it seeks to progress its $1 trillion economic transformation plan. Expenditure will fall to $342 billion as the kingdom adjusts to a recent fall in oil prices. Speaking of oil, Matthew Merton, our chief correspondent in Riyadh, joins us with more. Matthew, walk us through some of the highlights from the budget. From what I can tell, the government is actually looking to trim spending next year.
Yeah, as you say, there is this. There's a headline fall in spending planned for 2025, and that comes after this year, where spending has been something like 7% above targets set out in the budget earlier on. So the government has said that over the course of 2024, it's wanted to boost spending, go above the budget because it's got a couple of things that have happened in 2024. Aramco has been paying out these huge additional dividends, which means that there's been some additional revenues coming through, and it's also, the government has been saying that it wants to invest in the infrastructure and the development of the diversification projects of the country. This year, going into 2025, we're going to be in an environment where Aramco is not going to be paying out the same level of dividends. You were just talking about the oil price, OPEC struggling to bring back these production cuts. Oil prices looking weak, so the oil revenue situation is looking much more challenging. So as a result, I think we're seeing the government now trying to take the brake off some of the big spending outlays that it had been doing. Also, obviously some of the investments are finishing and are starting to be delivered. We see already some of the tourism projects have happened and are opening, but there's obviously a vast amount more for the government and the PIF in particular to do over the next decade in terms of investing in that diversification story.
And Matthew, let me just ask you about the deficit and the implications that could have on the Saudi Arabian sovereign balance sheet, so to speak. We know that they've been in the market a lot this year, issuing a lot of debt, both at a national level, but also via some of their state-owned enterprises as well. To what extent do we expect this financing momentum to keep up in 2025 as well? Are we going to continue to see Saudi Arabia issue a lot of debt to finance their plans?
I think the short answer to that is yes. The government is going to need to go out and borrow to try and maintain some of the spending plans that it has outlined. Although we were just talking about how it's trying to trim the budget. I think the proof will be in the pudding in that, and some of the analysts are quite sceptical about the government's ability to cut back on some of the spending because there is a big the majority of the spending is in the operating, the day-to-day expenditure line, so that's the harder area to try and cut back from. So that means that you may come in a position over the course of 2025 where spending again overshoots what's outlined in the budget. Oil prices remain weak, which will put the government in a position where it's going to have to go out and continue borrowing. We're going to have to see the PIF and the PIF-related entities that have been borrowing over the course of this year also coming out. And also, remember that we're now sort of almost a decade in from when the government first started getting these big budget deficits as a result of low oil prices in 2014 and 15, which means that some of those initial 10-year bonds that were issued back then will be maturing, so the government's going to have to go out and refinance those as well as raising the new debt that it needs as well. So I think, yes, we will see this pace of borrowing continue.
Interesting. Matthew, thank you so much for bringing us the highlights of the Saudi budget. Matthew Merton, our Saudi Riyadh correspondent. Thank you. Now, coming up, Namibians head to the polls in the most hotly contested election in decades. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Voters in Namibia head to the polls today to pick their next president and parliament. It has been billed as the most hotly contested vote since independence in 1990. The incumbent ruling party, SWAPO, has dominated politics for the past 35 years, but is now facing strong opposition as public support weakens. Let's get more from our economy and government reporter in Johannesburg, Ntando Thakwana. Ntando, good to have you with us. Just walk us through why this election is so hotly contested. What are the factors contributing?
Morning, Jumana. So Netumbo Nandi-Ndaitwah is really in a tight race to keep her party, the SWAPO, in power. But this is looking like it's going to be an election that's going to deliver a moment of reckoning for them, with the party's support expected to fall from the 65% it achieved in the 2019 election. And that's largely because of the fact that voters are dissatisfied by the high levels of corruption, the high levels of unemployment and inequality. And on the other hand, you're actually seeing the Independent Patriots for Change. It's a new party contested in the election for the first time in 2019 and actually took a huge chunk from SWAPO and managed to get 29% of the vote. And those are some of the issues that are going to deem this a very, very tight election this year.
And the leader of the opposition is a lady. It would be the first time that they will have a lady leader in case the opposition do win. Let me just ask you a question about the economy. What type of economy will the next leader inherit? What are the problems they're going to be facing?
I mean, aside from the structural issues of high unemployment and weak economic growth, the next leader is about to inherit a country that is about to experience a boom in its oil and gas industry. Namibia is actually fast becoming a hot spot for gas explorations, and companies like Total Energies and Shell have really been making these huge discoveries. There have been a lot of discoveries along the Orange Basin and a lot more expected in other areas. So people will be looking out for that. But this also raises the concern about how the Namibian government will be able to manage this boom. There has been criticism that it's not been able to really manage its other minerals like diamonds and uranium. And for a country that's the third or the fourth largest uranium producer, people have said that it's quite problematic that the broader economy has not really benefited from that. But aside from that, there's also an issue of a severe drought that the country is experiencing. It's actually causing a food security risk. They've had to cull wild animals to actually feed people like elephants.
Yeah, excellent points. And earlier I said leader of the opposition. I meant leader of SWAPO for the time being as the deputy president. She is the lady. Thank you, and Tanzo Takwana, our economy and government reporter in Johannesburg, into these very hotly contested Namibian elections. So we're keeping a close eye on what happens there. As for markets, this is the picture right now. Futures not doing a whole load of much. So S&P futures are dipping below the flat lines, leaning towards the red after another record high yesterday. It's 52nd record high for the year. Nasdaq also dipping about 0.1%. Markets there reacting to some of the FOMC minutes that came through yesterday. We'll talk more about that in the second hour of the show. But that's it for the first hour. I'm Jemana Bersachi in Dubai. Stay with us for the second hour as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Israel and Hezbollah agreed to a 60-day ceasefire mediated by the U.S. It came into effect 3 hours ago. President-elect Donald Trump announces a slew of cabinet appointments, including Jamieson Greer as trade representative and Kevin Hassett to lead the National Economic Council. And oil falls on abating tensions in the region, while stocks and the dollar fluctuate on Trump's commitment to tariffs. Good morning. It has just gone 9 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. It is a big day for the region with that ceasefire announcement.
Absolutely, Jemana, and I know you'll bring up more of that to us soon. I'm Jennifer Zabasaja in Johannesburg, where it has just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Thanks, Jen. Well, we're going to talk a lot more about the ceasefire deal, what is included in it, and how likely it is to have long-lasting ramifications on the broader region. But as ever, we're going to kick off the second hour of the show just taking a look at markets, because we did see quite a volatile day for markets yesterday after that tweet came out in the morning suggesting that Trump wants to reintroduce tariffs, apply more tariffs to countries around the world, specifically aiming this time at Canada, Mexico, and China. But by the end of the day, the stock markets had actually shrugged off most of that news. Another record high for the S&P, 52nd record high of the year. The market's also digesting some of the FOMC commentary that came through, suggesting a more perhaps gradual a timing to come vis-a-vis the rate cuts out of the FOMC. So a gradual approach to the rate cutting cycle. 10-year yields continue to rally. We're at 4.3 now. We've rallied a full 10 basis points throughout the last 24 hours. And again, we saw an instant knee-jerk reaction after that tariff tweet came out. U.S. dollar today slipping somewhat, but at the beginning of the session yesterday, we were up about 0.7% at some point. So we had fully reversed some of the optimism that came through after the appointment of Scott Bessent to Treasury Secretary position. And then the tariff tweet sent this market a lot stronger. Today, though, we are dipping a little bit. Brent also in focus as we head into that OPEC Plus meeting. We were just talking about that in the first hour of the show and some of the pressure that is on the group with regards to their production and whether or not they will actually be able to increase production without causing a significant impact on the marketplace. So big question for OPEC Plus. And this is a picture of the Israeli shekel. We have rallied into this ceasefire announcement. So we've rallied about 1.6% versus the USD over the course of the last 3 days. All right, moving on to Asian markets. Avril Hong is in our Singapore studio. Avril, what are you watching out for this morning?
Yeah, it's really interesting today to see how the region's benchmark is down despite gains among Chinese equities. And I thought I'd show you what the drag on the MSCI Asia Pacific is. These are the benchmark heavyweights that are pulling things down. We have the Japanese exporter Toyota as the yen climbs coming under pressure. Our newsroom colleagues have also put out a really good piece about how overall Japanese automakers have been losing ground to Chinese ones. But the chip makers are also in focus today. Another big drag on the region's benchmark, and this is after Trump's pick for the Department of Government Efficiency talked about how the CHIPS Act is wasteful. And of course, some of these names have benefited from that very act. So we're seeing the South Korean chip makers SK Hynix, Samsung Electronics among those that are underwater today. Guys?
Avril, thank you so much. A 60-day ceasefire between Israel and Lebanon's Hezbollah took effect just a little over 3 hours ago. That's after nearly 14 months of fighting sparked by the ongoing war in Gaza between Israel and Hamas. President Biden hailed the agreement as a step towards more lasting calm in the region. But shortly after Biden spoke, Israel and Hezbollah pressed ahead with attacks, with the militant group saying it carried out drone attacks on targets in Tel Aviv. Now, the agreement drew objections from some hardliners in Israel, raising fears about talks on a longer-term ceasefire.
This is designed to be a permanent cessation of hostilities. What is left of Hezbollah and other terrorist organizations will not be allowed, well, I emphasize, will not be allowed to threaten the security of Israel again. Over the next 60 days, the Lebanese army and state security forces will deploy and take control of their own territory once again.
For more on this, Bloomberg's UAE Bureau Chief Dan Akhrish joins us here in the studio. But first, let's cross to Jerusalem and bring in Bloomberg's Dan Williams. Dan, what do we know about the components of this 60-day truce?
Well, the 60 days are meant to be a test period, a preliminary truce that could prove more protracted if honored, if implemented properly. The Israelis will gradually withdraw from positions they took in southern Lebanon, handing them over with some degree of engagement, I imagine, to the Western-backed Lebanese military, which Israel expects to gather up any Hezbollah infrastructure, any Hezbollah weaponry it may come across. The Israelis have also said that they reserve the right to strike at any Hezbollah infractions during this period. There's been some silence from the Lebanese side about this specific requirement. And I think the 60 days, it's no accident that it would take us right into the beginning, the inception of the Trump administration. I think the people who designed this truce are hoping that the dynamic of the handover in Washington between administrations will encourage all sides to turn this into something more lasting, if not a full peace treaty between Lebanon, the state of Lebanon, and Israel.
And just to bring up that point as well, in reference to the statement that was put out by the presidents of the U.S., Joe Biden, and the president of France, Macron, both of them putting out this joint statement yesterday, but saying that, to Dan's point, this announcement will create the conditions to restore lasting calm and allow residents in both countries to return safely to their homes. Dana, let me just ask you about the reaction so far that we're hearing from Lebanon officials. Have we heard from Hezbollah yet?
We haven't heard from Hezbollah, but we saw a group of people raising Hezbollah flags, roaming around what is left of Beirut's southern suburbs. Mind you, the ceasefire came after Israel dramatically escalated attacks in Lebanon, across the country, and especially in central Beirut and Beirut's southern suburbs, kind of like emptying their target of their bank of targets. Now, we saw Lebanon welcoming the ceasefire agreement. We saw yesterday Prime Minister Najib Mikati saying that the army will boost its presence along the border in the south. Local media reported that army tanks have already made their way into South Lebanon. That was even before U.S. President Biden made that major announcement. Of course, but there is this somber feeling, right? What are people returning to? Some villages, border villages along the Israeli border have become unrecognizable. Homes destroyed, hospitals, schools, especially for supporters of Hezbollah. What are they returning to in Beirut's southern suburbs, in the south, and in the Baqa? And this is where probably the pressure point will be on Hezbollah, is to compensate for all of that. Now, They will say that this is a victory, but mind you, already the Lebanese have been saying this is not a victory, and there is significant opposition that has been deepened throughout this war against Hezbollah. The big question is, can a unified Lebanon really disarm Hezbollah, go into the south and implement 1701? They have shown this unity, but of course days will show whether this is feasible from their part.
Yeah, and of course reference to UN Resolution 1701 that was introduced after the July 2006 war. What we got with the 60-day truce is reminiscent of some of the components of that 1701 resolution that was never fully implemented. Dan, let me come back to you. When Israel started up this new front on the Lebanon border, their stated objective was to restore calm and stability to the northern borders so that those families, the 60,000 odd people that have been displaced, could return back without living under the threat of rocket fire from southern Lebanon. Do you get the sense that these families are readying themselves to move back to the northern border, or is there still a feeling that we have to wait and see how things evolve in the coming months in order for that war objective to actually be fulfilled?
To judge by the statements of a number of mayors of those communities in northern Israel, there's a good deal of trepidation, in fact, a good deal of rancor over this deal. I think they wanted what they would see as a crushing blow toward Hezbollah, something far more conclusive, a victory as they might define it. But as you noted, Israel's war goals for Lebanon were actually very restrained in the way they're defined. In fact, they made no direct statement about Lebanon or Hezbollah. They talked about conditions for the return of those residents. And I think the Israeli government will be looking to basically optically establish that no Hezbollah is visible across the border. We're talking some communities, Lebanese communities, are only 300-400 yards away from Israeli communities across the border fence. As Dana alluded to, there is much damage on the Lebanese side. When those Lebanese residents return, they will be busy rebuilding. There will be a presence of Lebanese army, presumably. And I think the Israelis, once they're convinced that Hezbollah is not returning, at least in a form that's readily observable, at least not in a form that could be perceived as a military threat. And again, Israel has promised it would strike against any attempt by Hezbollah to establish or reestablish itself militarily down there. I think they will be returning. We're talking about tens of thousands of people.
Yeah. Dana, just a last question to you. As we talk about the redeployment of the Lebanese army to the southern part of the country, the Lebanese army is also operating in a very diminished capacity. It's not a very strong army. It doesn't really have a lot of resources. So it will entail the involvement of the international community. How big a role are we expecting the likes of the U.S. and France to play in monitoring the situation?
There was always this argument that the Lebanese army is ill-equipped and Hezbollah is much stronger. The Lebanese army doesn't have a stockpile of missiles. They barely have Cessna planes or a helicopter that actually just they use to put out fires. So now with the conference that happened in Paris a few weeks ago, there were pledges of millions of dollars to the Lebanese army to help them and equip them to go first into the south and actually open conscriptions, because they need about 5,000 to 6,000 additional troops to go to the south. And now we're seeing France yesterday saying that they will support the Lebanese army. And there was always this argument in Lebanon that Western powers don't want to give the Lebanese army any significant weaponry because of their proximity to Israel. But now, of course, again, days will show whether this was a serious pledge to help the Lebanese army to boost their capabilities to actually not face off, but at least overpower Hezbollah in the south.
Yeah. Dana, thank you very much. Bloomberg's UAE Bureau Chief Dana Khrish and Bloomberg's Dan Williams in Jerusalem. Thank you for joining us on this important day.
Yeah, thanks so much for that. President-elect Donald Trump has named Kevin Hassett to direct the National Economic Council and Jamieson Greer as the U.S. Trade Representative, filling two key posts on his economic team. Let's bring in Bloomberg News' desk editor, Jill Desis, who is joining us for more. So, Jill, Greer has a number of ties to the Trump administration, in addition to being a familiar face in the trade sector of the administration. Talk to us about that.
Yes, that's right, Jen. I think what you're looking at with these picks, as is what Trump has really brought to his economic team so far more broadly, is there's really no wild cards, really no massive surprises here. I mean, with a pick like Greer, this is a longtime protege of Trump's previous USTR, the trade representative, Robert Lighthizer, who obviously spearheaded all of those tariffs, part of the trade war during the first Trump administration. He was, as I said, chief of staff then. So in picking this, in picking Greer here, you're really kind of bringing in somebody that would seem apt to continue reinforcing and bringing forward a lot of those really aggressive trade policies from Trump. As we saw earlier this week, Trump announcing, another tariff, more tariffs on Chinese goods, additional tariffs on Mexican and Canadian goods. You're kind of seeing those announcements brought together with this pick of Greer, who of course has to be, Senate confirmed here, all kind of reinforcing this very aggressive trade policy that Trump wants to bring forward as he returns to the White House.
And when we think about Kevin Hassett as well, Jill, he potentially will be named for the National Economic Council. He's also an alum of the administration. Talk to us about what exactly he could bring to these names and to this makeup that we've already heard from some of the names that we've gotten.
He is, yeah. So, I mean, Kevin Hassett here is really, a fixture in conservative circles, and yes, served as a senior economic advisor to Trump during his first term. That national economic chair pick, that's a really interesting position because there's a bit of flexibility that you get with that kind of position. During Trump's first administration, Gary Cohn served in that job, kind of worked quietly behind the scenes to really bring forward Trump's big, tax legislation. Trump's obviously looking to renew that, and, maybe that's something that he could, that Kevin Hassett could really kind of focus on here. We also had Larry Kudlow during the first administration kind of take the reins from Gary Cohn, and he was much more sort of, outspoken about really promoting Trump's economic agenda. The one thing with this kind of position, though, so this is an appointed position, is that, there's a little bit of jockeying with other major economic roles that are within Trump's administration, such as the Treasury Secretary role, Commerce Secretary role. I don't know how much infighting there's likely to be at this point, but I think it is worth noting that when you've got all of these major economic positions here, it'll be interesting to see who ultimately sort of jockeys for power and influence within this incoming Trump administration.
Yeah, more and more names that we're getting day by day. Bloomberg News' desk editor Jill Desis there with the latest on the Trump administration. Thanks so much, Jill. Now, still ahead, we'll get the market outlook with Aberdeen as investors digest Trump's latest cabinet appointments and easing Middle East tensions. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, traders are digesting Donald Trump's latest cabinet appointments a day after his tariff threats roiled emerging markets. Meanwhile, oil markets are weighing easing Middle East tensions amid signs that OPEC Plus may delay restoring output. Now, joining us is Sree Kochugovindan, the senior research economist at Aberdeen. So, Sree, thank you so much for joining us. Let's just start with some of these appointments that we are getting from Trump. We were mentioning a number of the names that were actually with the president-elect during his first administration. What do these names in particular tell you about what economic policy could be shaped, or what could shape economic policy in Trump 2.0?
Yes, I think the list of names that we're getting as they drip through is very clear in terms of fairly hawkish in terms of the trade policy. They are going to be quite strict and quite swift in terms of announcing policies. Now, obviously, it takes a little bit of time to implement and go through process and investigations and so on. What we can expect is a very sharp increase in the average tariff on China in particular, and this should start fairly early on in 2025, and perhaps on other countries. And we saw in that tweet yesterday mention of Mexico and Canada. I think we'll see this happening on a case-by-case basis. And what we can see is it's quite strategic and really in terms of doing some negotiations as well. So yesterday it was talk of the immigration policy is linked in there, drugs as well. So really a case of negotiations as part of that trade story as well, negotiating other policies. And that's something that we saw in Trump 1.0, and a repeat of that is likely. But also we're going to see some fiscal loosening there, an extension of the TCJA, the Tax Cuts and Jobs Act. That's going to be likely. And also some deregulation. The names here are really in line with the policies that were part of the campaign. So really, it's a case of supporting US growth to some extent in 2025.
Well, it's interesting, Sree, because there's a division in terms of what exactly some of these proposed policies actually do. If we are to see some of these tariffs increase, some of these tax cuts increase, also mass deportations, do you not see some of this then putting some pressure on inflation in 2025?
Absolutely. I think we need to remember the profile of inflation. We are still on that disinflation trend, and that's still intact going into next year. But this means that this combination, we still don't know the details yet and the range of goods it's going to impact, but it sounds fairly broad-based at the moment, and even if they are temporary at first. Now, tariffs can be a temporary impact on inflation, but it does seem more important is this immigration story and how far that will impact the labor market. If that acts as a shock to the labor supply, that you can lead to an increase in wages, and that's a bigger impact actually in terms of the inflationary pressures going into 2026 and onwards. And we do expect inflation to be hovering just above target actually for the coming year. So a disinflation trend, but settling at a higher level than we were used to pre-pandemic. And therefore, what does that mean for rates from the Fed? You know, some easing, yes, we're going to see some more easing from the Fed, but settling again at a higher terminal rate than we had previously been expecting without a Trump win.
Do you take a step back then on a December potential cut, or are you in the camp that we could potentially see that?
It seems that a December cut is likely, unless we see a very big surprise in payrolls numbers. I think it's highly unlikely that they pause at this stage. So we do expect a December cut, but as the pace next year is going to be slower. So this year was quite aggressive, started with 50 and then consecutive 25 basis points cuts. Next year will be a slower path. 25 basis points per quarter, perhaps, and really we're only looking for 75 basis points next year. So at a slower pace from the Fed. And that could be quite different compared to other central banks, for example, ECB, where the growth outlook is a lot weaker, and some of the trade spillovers could be quite substantial, particularly for countries like Germany, the autos exporters. Yeah. Remember, he's already targeting autos industry within Mexico as well. So these countries will be vulnerable, and a faster pace of easing from the ECB can be expected relative to the Fed.
And Sree, you mentioned some of these countries that are either directly or indirectly in the firing line of potential tariffs. Are there any moves, though, that we could see from some of these other central banks that could potentially offset the effects of the tariffs if they actually are implemented?
I think each country will respond in a different way. If the example of ECB, there will be there's a case for faster pace of easing there. It really depends on how sticky inflation is. So, for example, in the UK, inflation is a bit stickier. So even though there's easing, it'll be somewhere in between the Fed and the ECB. Now, also, it's not just the central banks that respond. There will be trade negotiations between the different countries, and if you take the biggest, the biggest sort of hit is likely to be to China in terms of tariffs. You can expect some negotiation there, and perhaps several policy levers can be pulled, whether it's monetary policy easing, perhaps some mild FX devaluation, nothing too dramatic there because of some of the imbalances it can create. But you could see some other factors such as critical mineral supply. That could be constrained. That's a big tool that perhaps China could use in response. And we're already seeing that in relation to Japan, South Korea, where the Biden administration had been putting restrictions and China has responded with critical minerals.
Right. Great to get your insights this morning. Sree Kochugovindan, Senior Research Economist at Aberdeen, joining us. Thanks so much.
And still ahead, more on the 60-day ceasefire between Israel and Hezbollah. We'll be speaking to Hasan Alhasan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies, on what this means for the wider Middle East. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Now for a look at some of the other stories we're following this morning. Huawei is to strip its smartphones and tablets of Google's Android software from next year as it pivots away from U.S. technology. The company's new flagship phone, the Mate 70, will debut Harmony OS next, an operating system that does away with remnants of Android in favor of entirely indigenous tech. The rollout is a key part of Huawei's attempt to break free from years of U.S. sanctions. And this is how equity futures are shaping up. When we come back, we're going to be talking more about the first few hours of a 60-day ceasefire between Israel and Hezbollah.
This is Horizons Middle East and Africa. Our top stories this morning. Israel and Hezbollah agreed to a 60-day ceasefire mediated by the U.S. and France. It came into effect just over 3.5 hours ago. President-elect Donald Trump announces a slew of cabinet appointments, including Jamieson Greer as trade representative and Kevin Hassett to lead the National Economic Council. Plus, Namibians head to the polls today in the most tightly contested presidential election since 1990. More on that in a bit. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Joanna Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. A big day for us over here in the region as we continue to digest the ramifications of that ceasefire deal between Israel and Hezbollah. Jen.
That's right, Jumana. And let's just take a look at where markets are positioned as they digest a number of storylines at this point in time. If we start with U.S. futures, steady right now, but that's, of course, coming after we saw the S&P on Tuesday notch another record. It's 52nd of the year, rising for a 7th straight day on Tuesday. But as you can see right now, just above that 6,000 print. Clearly, investors shrugging off those Trump tariff threats, but still taking heart potentially from a ceasefire between Israel and Hezbollah for Israel and Hezbollah in Lebanon. We also have the 10-year yield up right now, ticking ever so slightly lower, but right now at about 4.29% there. And we also have the Bloomberg dollar on the board, as you can see, trading down slightly, pairing some of that strength, continued strength that we did see on Tuesday after that Trump tariff announcement, rising by as much as 0.7% on Tuesday against G10 currencies, but down this morning. And we have Brent crude on the board just shy of $73 a barrel, again, amid those easing tensions between Israel and Hezbollah in the Middle East. And just to bring you the terminal chart for today, we are getting the Fed's preferred inflation gauge later today. That is core PCE. The estimate for that is a 0.3% rise from the prior month. Sticky inflation potentially would enforce those Fed minutes that we did get on Tuesday, supporting, again, gradual rate cuts as we move forward. But let's turn to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Yeah, Jen, as we're talking about rate cuts from the Fed, it is about rate hikes from the Bank of Japan. And I thought I'd highlight what we're seeing in Japanese equities underperforming for another day in the region. Part of this is related to the prospect of tariffs, but also the yen strengthening 3-week high against the greenback. And that, as you know, is really uncomfortable for some of these Japanese export names. And this is coming against the backdrop of traders ramping up their bets of a BOJ rate hike come December. The probability or the possibility of that in the swaps market has gone up to 60% from about 50% earlier in the week. And this is coming against the backdrop of some of these positive signals of wage hikes for next year, whether you're looking at the signals from the largest labor union in the country or from the Prime Minister renewing his call for companies to hike wages. So that is part of what's fueling expectations of a BOJ rate hike. That's even putting pressure on bonds in Japan, guys.
Yeah, well, it's something specific to Japan going on there. One of the few central banks around the world that are still hiking. Avril Hong in Singapore, thank you very much. Now, a 60-day ceasefire in Lebanon is in effect. The Israel-Hezbollah deal could clear the way for a more lasting ceasefire after more than a year of clashes that have destroyed the Lebanon-Israel border area and seen Israel bomb parts of the capital, Beirut. But talks on a longer-term truce would likely be complicated. Israel wants Hezbollah to remove its fighters and weapons from the broader border region in southern Lebanon, with United Nations forces and the Lebanese military patrolling the area to ensure compliance. For more, Hasan Alhasan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies, joins me now. Hasan, good to have you with us on this important day. What do you make of the timing? Why now?
Hi, good morning, Jumana. Good to be with you. I think the timing, to my mind, is primarily down to Israeli calculations, because I think Hezbollah has been ready to agree to a ceasefire deal for some time. We now know with a very high degree of certainty that Hezbollah had agreed to a ceasefire at some point in late September before Israel took out its Secretary General, Sayyid Hasan Nasrallah. And so I think it's primarily down to the Israelis at this point in time. Now, what has changed on the Israeli side of things? Well, on the one hand, I think it seems that Israel has been suffering some losses in Lebanon and in Gaza. And so it has been facing pressure on its manpower. It is, according to Israeli media reports, facing manpower shortages in the military. It's having a hard time conscripting people, additional people to join its ranks. And so there's been a significant degree of pressure on some of its reserve forces, for example. At the same time, there are indications that Israeli Prime Minister's Benjamin Netanyahu's government might attempt to pass a highly controversial law that would codify the exemption granted to ultra-Orthodox Jews, the Haredim, under pressure from his ultra-Orthodox coalition partners. And if he does so, then it would be useful to relieve the pressure on the military by freezing the Lebanon front as to make such a law more palatable to the wider Israeli public.
Interesting points you bring up there vis-a-vis the Haredim. Let me just ask you as well about the possibility of long-term success for this truce, because it is temporary in nature. It's only 60 days long. What would need to happen in these next 60 days for this temporary truce to become a permanent truce?
So I think the idea, the way I understand it, is that this is a 60-day transition period during which Israel will eventually withdraw totally from southern Lebanon and go beyond and will essentially evacuate Lebanese territories. Meanwhile, Hezbollah would also evacuate the area south of the Litani, and so it would essentially withdraw to the north of the Litani River, according to UN Security Council Resolution 1701, which ended the 2006 war. And instead, we would have an augmented UNIFIL presence, augmented by especially French peacekeeper forces. So jointly with the Lebanese armed forces, which would also deploy to the area south of the Litani River, we would see essentially intensified patrols and peacekeeping missions. At the same time, there will be an international effort by the Americans, the French, in addition, obviously, to the Israelis and Lebanese, to monitor the ceasefire. And so, in a sense, I think this is best understood as a 60-day transition period, which, if successful, should lead to a permanent ceasefire. Now, 60 days is a lot of time for many things to go wrong. There could be differences in interpretation of what Hezbollah may or may not be allowed to do. Whether Israel also truly abides by this is highly questionable. And so the success of this deal is obviously far from guaranteed.
Yeah, well, it is a win for the Biden administration in the last couple of months of the president being in term. I wonder whether they may actually have a shot at getting a ceasefire agreement done in Gaza, because they've been really pushing hard. All of the mediators have over the course of the summer with no real conclusion, with no success. How likely is it that they will be successful by the end of this year on the Gaza front?
So I think the idea here is that this is totally disconnected from the Gaza front. And I think all of the parties have been very careful not to draw any linkages. I take issue with the narrative that the Americans have been trying really hard to secure a ceasefire deal in Gaza. I think they've been trying very hard within a very narrow scope of asking the Israelis very nicely to do so. Whereas in reality, the Americans have a very large toolkit, a very large amount of leverage that they could exercise over Israel, given the vital U.S. Military support, intelligence support, and diplomatic support and cover that it provides at the UN Security Council, but which the U.S. chooses not to exercise vis-a-vis Israel. So I think the main aim has been to secure a ceasefire deal in Lebanon, but I don't think that this will necessarily lead to a ceasefire deal in Gaza. If anything, one could imagine that the ceasefire agreement in Lebanon could free up additional resources for Israel to redirect towards Gaza. This is bad news for Hamas, even though Hamas has formally welcomed the ceasefire agreement in Lebanon. Nevertheless, the fact that the dynamic of the war in Lebanon being now disconnected from that in Gaza will obviously lead to Hamas being a bit more isolated than it already has been, even though there is, I think, significant evidence that it continues to put up a considerable amount of resistance in the Gaza Strip.
So interesting. It's always great to have you on and to listen to your perspectives. Hasan Alhasan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Thank you.
All right, coming up, Namibians head to the polls in the most hotly contested election in decades. We have the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, voters in Namibia are heading to the polls currently to pick their next president and parliament. It has been billed as the most hotly contested vote since independence in 1990. The incumbent ruling party, SWAPO, as they're known, has dominated politics for the past 35 years, but is now facing strong opposition as public support weakens. Let's get more from our economy and government reporter in Johannesburg, Ntando Tukwana. She's joining me now. So, Ntando, this is a very important election for a number of reasons. Talk to us about why there is so much focus on this.
I mean, Jane, Netumbo Nandi-Ndaitwah is really in a tight race to keep her party in power, and whether she gets this and becomes Namibia's first female president or not. It's still going to be a very sobering election for them because party support is declining, and it's expected to fall from the 65% it achieved in 2019. And really, voters are dissatisfied about the high levels of unemployment, corruption, and inequality, and a growing housing crisis. And it's quite important to note that the number of registered voters this time around has increased, and that's being pushed up mostly by young people who are supposedly the people who are most affected by these issues. And on the other hand, you've got the Independent Patriots for Change. It's a new party that contested elections for the first time in 2019 and really stole a huge chunk of SWAPO's votes during the time. So they are also coming in as an alternative to a lot of people who are looking for real, tangible solutions to the challenges that they're currently facing.
And we've seen some of these elections across the continent turn out differently, whether you're the incumbent or you're the new party that is coming in. But when we talk about the economy, what is the focus of the economy that a number of voters are going to be going to the polls for and voting about?
So the key one is high levels of joblessness and just the fact that the economy is weak. But what the next leader is also going to be tested by is this huge anticipated boom in its gas and oil industry. In fact, Namibia is fast becoming a key hotspot for gas and oil discoveries. Companies like Total Energies and Shell have made these huge discoveries, and there are many more expected in the Orange Basin and in other areas as well. But the key concern there is that Namibia is not really famous for being able to manage, their minerals well. There has been criticism that its diamonds and minerals were not really managed well, and that for a country that is the third or the fourth largest uranium producer in the world, that it should have benefited more from that. But aside from that, there's also a drought issue in the country. It's causing a humanitarian issue, food insecurity risks, and the government has actually had to cull hundreds of wild animals to, do a simple thing, feed people.
It will be fascinating to see how this turns out. Thanks so much, Ntando Takwana, our economy and government reporter here in Johannesburg with us. Now, here's a look at some other stories we're following in the region. Nigeria's central bank has raised interest rates for a sixth straight meeting, intensifying its quest to curb surging inflation and support the battered naira. The quarter-point hike, taking rates to 27.5%, was smaller than forecast by economists. Fuel and food price increases and a weak currency have driven inflation to its highest level since 1996. Jumana?
And oil in focus today as key OPEC Plus nations begin discussions to delay the production restart plan for January, potentially for several months. Let's get the details from Steven Stratinsky, who leads our Asia energy team. Well, we're keeping a close eye on the price of oil, and it seems like some of the geopolitical premium has been priced out of the complex. Talk us through the setup going into this OPEC Plus meeting and what these ministers may be considering.
Sure. I mean, the situation with the Hezbollah agreement with Israel has certainly taken out some of the fear that this could spiral into a larger conflict in the Middle East. Because of that, you're looking at a situation where prices might start to fall down. There was some risk premium froth, and you saw prices drop yesterday. They're up a little bit today, but Brent could be down further. One of the elements that OPEC Plus will be looking at is demand. And when you look at the demand situation, everyone has to look at China. And Chinese demand hasn't lived up to the expectations that a lot had expected. There was this view that Chinese demand would really rebound and help drive global oil demand growth after they reduced some of their COVID restrictions. But that hasn't come. The country is leaning more on EVs. EV sales have boomed. At the same time, their economy hasn't been growing as much as expected. Those two together reduce the demand profile for China. Now there's also supply. U.S. shale output has been much stronger, I think, than some in OPEC Plus or the market in general had expected. Since OPEC Plus began their cuts from 2022, U.S. oil production has risen by about 2 million barrels per day. So essentially, the U.S. replaced OPEC Plus. So to come back into the market, any decision to increase production from Saudi Arabia and the other 7 members in the OPEC regime from January would add to an already frothy market, add to a potential oversupply in 2025, and further reduce prices, which is something that the governments in these oil-producing countries would be hit with.
And Stephen, you talk about some of the factors that they may be weighing up. But again, from a supply perspective, it really does feel as though this market is in a state of oversupply, even without OPEC Plus putting production barrels back to the market. Does this not mean that they will, at some point, have to run the risk of further destabilization in the price or further downward pressure on the price if they want to retain market share?
I think that's going to be the big discussion over the weekend. I think that's the view that they're going to have to take, because there's always been that argument that if you're leaving barrels off the table, then you're ceding supply to you're ceding your customers to potentially other suppliers. Now, it's a bit more complicated than that. There are some refineries that are designed to only take certain types of crude from the Middle East or from the United States or other places. But the fact of the matter is, you are looking at a bit of a shift in the market. And there was an Iranian op-ed from an official there just yesterday. It was retracted, but it was quite critical of the OPEC Plus strategy, saying that with them reducing output from 2022 and often kicking down the can down the street as to increasing their production again, OPEC Plus had ceded that supply, and so it does make it challenging to come back, and they are potentially losing customers. So this is something that will be discussed. It's not unheard of for OPEC Plus to let basically the supply loose, as we had seen in 2014, 2015, to get the market back. And that could be a possibility, but probably not at this meeting.
Yeah, not just yet. Stephen Satinsky, thank you so much. He leads our Asia Energy team. Well, coming up, the fallout from Mozambique's election continues. The Constitutional Council says its judges have received death threats as they work to validate votes. More on this next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Mozambique's Constitutional Council says its judges have received death threats as they work to validate the outcome of last month's disputed election. The elections have sparked protests in which at least 67 people have died. For more on this, let's bring in Bloomberg's Ndiro Oganga, who is joining us from Kigali. So, Ndiro, Mozambique has yet to calm some of the political temperature after these elections. Give us a timeline of what's been happening.
Morning, Jen. So this politically charged environment is because of how closely contested these elections are expected to be. It was supposed to be a tight race, but when the results were announced, the ruling party had won by over 70%. Then you have the opposition party led by Venancio Mondlane, who says that a parallel tally shows that he won by over 50%. These results angered him, angered his protesters, and there have been 4 waves of protests in Mozambique, with each wave being escalated further and further from the previous one. The last one was targeted at the economy, aimed at paralyzing everything. And we saw that this period is being described as the most politically charged in the last 30 years. These elections have also come under scrutiny from regional and international bodies who said that there were election irregularities like ballot box stuffing, result manipulation. And this has prompted the opposition to go to court and challenge the legality of these results. So despite the death threats that the judges are receiving, the president of the Constitutional Council says they're going to move forward with fairness and ensure that constitutionality is upheld because their decision is final and cannot be appealed in any other court. We're expecting this decision to come probably around the 23rd of December. It could come earlier. And whatever decision they make, it could spark a new wave of protest.
Right, and it could also spark concern about the economy. I mean, Ndiro, do we know what effect this delayed outcome is having on the economy in Mozambique?
Absolutely, Jen. You have Fitch Outlook who is saying that the unrest could cut economic growth in Mozambique this year, next year. This year, they had projected it to be about 4%. And if this protest continues, then that outlook is likely to shrink. It's also likely to increase their budget deficit to about 4.2% this year and about 3.1% in 2025. You've seen the government saying border closure has cost them $6 million. And the Business Association came out on the 12th of November saying that the protest had cost about $385 million, which is 2.2% of the GDP.
All right. Bloomberg's Ndiro Oganga with the latest there in Kigali. Ndiro, thanks so much.
Jen, thank you so much. Just going to round up the show with a recap of our top story today, and that is that a ceasefire deal has gone into effect between Israel and Lebanon's Hezbollah. It has been in place for 4 hours now, since 4 a.m. local time, 6 a.m. over here in Dubai. It will be a 60-day truce, so temporary in nature. Questions as to whether or not this opens up the door up to what France and the U.S. are describing as a lasting calm in the region. What we do know as components of the truce, Israel will gradually withdraw troops from the south. Hezbollah are set to retreat away from the southern border as well, 30 kilometers away from the border, and are also required to disarm and not maintain a presence in that 30-kilometer buffer away from the border. In addition, the Lebanese military will be deployed there alongside UN peacekeepers, and an international panel headed by the United States will monitor compliance with all of the components of this ceasefire deal so far. Lebanon's caretaker prime minister has welcomed the ceasefire, and in the last hour we had some comments also from the Iranian foreign ministry also saying that they welcome the ceasefire as well. So big news over here in the region, and is the first major step in de-escalating some of the conflict that has set the region back in the last 14 months. That was it for our show. Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Coming up next is Daybreak Europe with Tom McKenzie. This is Bloomberg.